So the other day I was looking at all my statistics on YouTube and Discord and TikTok, and one thing that I noticed is that primarily the people that watch me are men and a very small minority are women. Now, one thing that I wanted to do some digging into was who's actually doing it better. Do men outperform women or do women outperform men? And in today's video, we're going to do just that. And if you do enjoy this video, don't forget to like, comment and subscribe. So the purpose of this video is how do men and women invest and what does the data show and the data behind modern investing behaviours. Now, why this topic actually matters is in my Discord server, I ran some analytics the other day and out of 452 members, only 2% of that was female. And then when I started looking at statistics on my YouTube channel, in the last 28 days, only 99% were male that watched and 1% was female. Now, is this because of how the algorithms are based? Is this that more male content gets pushed in front of male viewers and more female content gets pushed to female viewers? And we're going to have a look at that later in the video. So from this paper, which is the one of 3 papers that we'll be looking at, this one was from behaviour in 2024. Of the women who do invest, the largest proportion save into regular savings accounts, which correlates for 61%. And 1 in 3, which is 35%, invest in cash ISAs. But just over 1 in 6, which is 17%, hold a stocks and shares ISA. Compare that with men, it's 30% of men that hold a stocks and shares ISA. Almost 2 in 5 of women surveyed say they do not invest at all, compared with almost a quarter of men that say they do. The reasons given were varied, predictably, in the current environment, of not having any surplus money to invest, was top of the list for most women. Almost 1 in 5 think the risk is too high, and 10% say they find investing too complicated, and 9% worry that they won't be able to withdraw the money if they need it urgently. Aviva's research also shows that women have a balanced approach to risk. When asked to describe their investment risk tolerance, the majority, 85%, said their investment strategies were either medium or low risk. This approach is to be commended as studies suggest that female investors regularly outperform their male counterparts over the long term, which is attributed to patience and more disciplined investment style. So, from Aviva's research back in 2024, it turns out that more women do invest than what was first initially based, and that more women do tend to take low risks, and that 65% of women that do invest like to keep it in a savings account or a cash ISA. So now let's look at the next paper. So a quick one from today's sponsor, investing.com. Now, investing.com have got over 33 million users, and this stock is used for its features on the stock market daily by a lot of people, and they've been kindly enough to partnership with me to give you guys an absolute bargain. On Investing Pro, which is their pro service, you've got the watch list where you can see all of your stocks that you import, which is most of mine here. So as you can see, some are overvalued, some are fair, some are undervalued, some are classed as a bargain. If you want to go into these stocks into more details, you click in, you can have the news, earnings, you can have the DCF models, the finances, you can have the health of the stocks. And on top of that as well, there is ideas, so you can track people like Warren Buffett, people like ARK, and you get to learn everything about their stocks and what they hold, and it's live and it's updated straight from their SEC filing. So you've got everything right in one place from a 13Fs. You've also got amazing screeners, so you can find new stocks if you're trading or investing. We've got the charts, and there's amazing chart work inside of here. And they've got a brilliant thing called Warren AI, which is a little bit like ChatGPT, but you can type in the charts, so you can click on the charts directly. It will read the charts and give you an in-depth explanation. If you are interested in getting involved in this, they've got a massive Black Friday sale at the moment, which is 60% off. And with my link in the description or my affiliate link, you get an additional 15% off. So go grab yourself a bargain while it's available, because I'll be using this a lot for my analysis going forward. So on this paper that was published by Barclays in June 2025, I found this super interesting. The fact is that men are more likely to invest than women, yet women do have the means to invest. There are approximately 30 million UK adults, many of which are women, who have £430 billion sitting in savings accounts, over and above what they need for emergencies and shorter term financial goals. This is money that could potentially be invested to help grow their wealth over the longer term. At Barclays, of customers with a savings balance of more than £20,000, 55% of those are women. Yet those signing up to Barclays Smart Investor are overwhelmingly male, with 69% men and just 31% women. So while many women are in a strong position of having enough savings to consider investing, they are less likely than their male counterpart to get invested. Analysis of investing patterns shown that amongst those women who are invested with Smart Investor, on average it takes them 4 months from the point of which they consider investing to open an investment account, 1 month longer than men. In the extreme cases, 10% of females say they waited over a year to start investing. That's almost double the figure for men, which stands at 6%. Considering that women tend to live longer than 3 to 4 years than men, it is crucial to ensure their money is working as hard as possible in order to achieve their financial goals and long-term financial security. So what stops some women from investing? Claire Francis, who wrote this paper, says known barriers to build up a meaningful investment portfolio include confidence and risk. And Claire also said that risk inherent in investing can cause many to hesitate when planning to get invested. While taking risks might feel daunting, understanding what risks mean when investing and how to manage it can help you decide the level you are prepared to tolerate. Risk should be viewed in context of your objectives, which means looking long term and not factoring in just short term weekly moves in markets. So how do women like to invest? Studies have shown that once women do take the plunge, they have proven to be excellent investors. A Warwick Business School study for Barclays previously revealed that women who invest generally achieve better returns than their male counterparts, outperforming them by 1.8 percentage points over 3 years. While there were significant differences between the genders, women, for example, only traded 9 times a year on average, compared to 13 times for men. The biggest difference, and the one that impacted their returns, came in their appetite for the type of investments they chose. The study said that female investors were less likely to indulge in the lottery style of investments that appealed to men, according to the research. A Warwick Business School analysis defines lottery style investing as a tendency to invest in more speculative, lower price shares that might increase in value substantially, along with a desire to keep to shares that show a loss while selling off their winners, the ones that have actually increased in value. So from this paper that was released by Barclays, some of the things that I learned from this paper was that men are more risk averse and they're likely to get in more speculative stocks, where the percent of women like to be more conservative, but will look at the longevity of things and look longer vision than what men will when they want shorter term gains. So both of these papers were very interesting and had a lot of insight, and maybe have gave a different opinion on whether men dominate this world of investing. So what did we learn from the papers? Well, one thing's for sure is there's definitely myths in the investing world. Women avoid risk, men are better at investing, women aren't interested in making money, they're all myths. So what can we learn from each other? So one thing I learned from the papers and from research in general is women can generally be more emotional to stuff and men can be more logical towards stuff. Now, lessons we can take from women in this is patience, diversification, long-term thinking, all winning mindsets to be a great investor. And things we can take from men is higher risk tolerance, faster decision making, and a lot more active market engagement. Again, all perks you can take from making money in the market long term. So one of the big things to take from this is communication. Open communication in investing communities helps close knowledge gaps, reduce myths, and build confidence of all investors. And I hope that you did enjoy this video today. And if you did enjoy this video, don't forget to leave it a like, a comment, and subscribe to the channel for more content like this. And thank you for watching.